Meantime, here, I want to draw your attention to a Christmas gift for investors and those who hope to maybe benefit from this. Stocks advancing for the eighth week in a row. In case you're counting now, that's the longest weekly winning streak we've seen since 2017. Now, what's been buoying this? And keep in mind, remember Wednesday we had that big drop-off, optimism that rates will stay low and maybe go a lot lower next year. And we see no signs that it is impinging the economy right now. We've got a lot of strong numbers, a lot of that retail sales activity you see. To Dave Dodson right now, the Stanford School of Business professor extraordinaire. I always wish I had professors like this in school because I could have made something of myself. But, Professor, always good to see you because I'd like to try to get your take on what the markets are telling us, because I know that old line, they climb a wall of worry, and they certainly have, but they keep climbing. I mean, with a little bit of a downtick in the Dow today, but the fact of the matter is week after week of strong buying. What do you make of it?
Yeah, well, but it's because the numbers are there, right? CPI is down, GDP growth is increasing, unemployment is lower, more people are entering the workforce. If you're running the stock market by the numbers, it should keep going up. I think what's really peculiar is that consumer sentiment, at least in the past, has been so dreadful. We've been thinking that the economy is so dreadful, despite the fact that most people have jobs. And that may be changing right about now. But the stock market is booming because all the numbers are going in the right direction right now.
You know, you talk about those numbers going in the right direction. Not for everyone. There is some concern that maybe, things could slow down. FedEx kind of alarmed people when it was pointing to a slower revenue growth. That gave people the idea that, hey, maybe, that means fewer packages or whatever. Of course, the fact is Amazon has been eating their lunch, so that could be cutting into that. But having said that, most companies are reporting robust consumer buying, and some of the airlines and some of the leisure companies, they're seeing it well into the spring next year. So play that out. What do you make of it?
Well, I think that what we have is we had that event-driven inflation, which was a couple of years ago, which you and I have talked about quite a bit, which was going to work its way through the system. There was a 100% chance we were going to have inflation given what happened with the government stimulus checks. There was also, I thought, a 100% chance that it was going to come back down. So that's come down. So now consumers are looking around saying, even though I'm not happy with the economy in what I say, by the way, interestingly enough, Neil, 20% of people feel they're better off today than last year. 44% feel they're worse off, even though most everyone is better off today. And we've got this weird dichotomy going on where people are out spending money like crazy, as we were just reporting a minute ago in the prior report. They're spending money at Christmas shopping, but they're complaining and they're grumpy. And Neil, I think it's this. I think it comes down to grocery prices and gas prices. Those are things people buy every single day. And what's happening is consumers are going into the grocery store and they are going to the gas pump and they're being reminded that the Captain Crunch cereal costs a lot more than it used to, and a gallon of gas costs a lot more than it used to.
Do you get a sense, though, from this, when people talk about the Fed cutting interest rates next year, whether it's the 3 that they kind of telegraphed or the double that the market seemed to think, normally that's a reflection of a slowing economy or worse if you're doing that. The markets are not taking it that way. I wonder, should we?
Well, the Fed raised it 11 times, and I thought that they were very impatient. And right now, rates are as high as they've been 22 years ago. So to bring it down to sort of a normalized level, they are going to have to do some rate cuts. So to me, that makes sense. They're not cutting rates because they think the economy is going poor. I think they're cutting rates because they're taking their victory lap that they beat inflation.
All right. Always good stuff. You know what makes you so good, Professor? You're good at explaining things. That's very tough to do. So I appreciate that.
That's my holiday present from you, Neil.
There we go. There we go. Great to see you, and have a Merry Christmas, Professor.